What's going on, G. Goodman?
What's brewing, Austin, Texas?
How are
Welcome
we?
to What's Brewing, our unpodcast show every Thursday morning, coming to you live. Today I'm in Austin, Texas.
So am I.
Kevin is too, so he says.
Again, you asked me earlier, stay out of my mitt, Goodman. Out of my mitt.
All right, let's talk about what's going on, Kevin. It has been a big week, jumping right into what's brewing in our economy. Talk to me about those mortgage rates. And we've hit 2-month lows, right?
We did. We hit 2-month lows, and that was as of yesterday. So that was fantastic news. And the good thing that I'm seeing is it's not even that it's really geopolitically driven. So we had the big news over the weekend, right? I mean, obviously we go covert and we drop a couple bombs on Iran, and everyone's kind of apprehensive as the week starts. Are we going to get dragged into a war? And obviously, tendencies, if you look at history, if you get pulled into a war, what do you think would happen, Jennifer? So from a market standpoint, how do you think that dynamic plays out a little bit? I'm going to put you on the spot today because I know you love this stuff so much.
It's my favorite. I think a lot of things happen when any nation goes to war. Historically, when our nation has gone to war, we've seen a number of things. Number one is obviously the economy gets a little bit fraidy cat, and so we have to start pumping money into it in order to keep things afloat while people are out saving our asses on the world stage. I would guess we might even get a professional women's baseball team at that point. It's one thing where we wouldn't have that, but listen, last time we had war, that's where the women stepped up and started, that's how A League of Her Own got started as a movie. It was predicated on the fact that all these women jumped into baseball and gave American fans something to do. But economically, we would start printing money and creating affordability. There would be a number of jobs that go away and a number of jobs that show up.
Well, I wasn't expecting the baseball answer. And are you good at baseball? Maybe you start a team. The J. Goodman Express.
Is that what we'd be called? Okay, I like it.
I'm not on the team.
Express.
Am I managing the team?
There's no crying in baseball, Kevin.
I should. And I'm a crier. Oh, man.
Did we just have a Hallmark moment? All right.
So I think we did.
Share with us what would happen.
So from an economic standpoint, what happens is typically people run to treasuries because it's a safe haven. It's a guaranteed rate of return. And when you go to war, it means the economy is going to slow, as you alluded to. So then people don't want to be in stocks. Everyone pulls money out of assets. They're like, But really what happened is by like Tuesday, we had it announced that we had a ceasefire, or Monday, whenever he dropped the F-bomb walking to the helicopter, which was classic. And then the better side of it is the data side of it. So the Fed members have been coming out this week. There's about 9 of them speaking, including Powell testified up in Washington, D.C. And they're all now alluding to a possible July rate cut, which is crazy. I don't think it's going to be July. I've been preaching from the rooftops since the beginning of the year, September. And now September, if I pull up this screen really quick, oh, no, not yours. Let's remove yours and pull up mine. This is September, as you can see, 69 and 21. That's a 90% up here, top right by our logo. They're going to ease. There's a 90% chance the Fed eases come September, which is massive. So what's going on is it looks like the economy is slowing. Consumer confidence on Tuesday really significantly took another hit. And the other piece of it is there's a labor piece of that. So when they go out and they ask all these consumers, they're like, hey, how do you feel? Do you feel warm and fuzzy? Everyone's like, no, shit, I'm panicked. They also ask them about the labor market. What do you think, for great jobs? What do you think it's going to be for the hiring in the future? What do you think? And what that does is perception's reality. Right? We talk about it all the time. So if perception's reality and I don't think there's jobs, what am I going to do? I'm probably not going to go look for a job. So I sit home, I don't go get that job, and the economy just continues to contract. So that's really what we're seeing. We're not seeing panic. The geopolitical side didn't really influence the market too much like I really thought it was going to. It played a little bit of a hand into it, but the slowing economy and the Fed members getting a little bit more dovish is what they call it about the economy is really what has brought us to 2-month lows. And you can see that if I add this one now, here's a 3-month chart, and you can see this red line that spits all the way across at 4.277. You can see where it hit in May. You can see we were back there in April, and you can see we were back there all the way in early April. Now, there's a lot of peaks and valleys in here, but we're coming up on another potential valley because, as we know, this is going to spike back up at some point. But Friday is inflation. Tomorrow, big inflation number, PCE.
PCE.
Personal
All right.
Consumption expenditure. It's the Fed's biggest indicator. They like it better than CPI. I like CPI as a better driver. They love this. So the Fed is all eyes will be on this. And today we get revision of GDP for Q1. It's not going to do a damn thing. I mean, it's going to be the same. So I don't really expect that to move the markets. It's going to be another kind of pause, wait, listen, digest. And as we can see right now out of the gates, traders are banking on that inflation is going to be at bay, and they're loving the fact that the Fed is becoming has a more warm approach to cutting rates. That's really what it is.
And so when you say warm, what does that mean?
Like I said, you got to so the beginning of this week or even last week, that number for that Fed rate change in September was like 50%. It's 90. So traders are looking at the Fed saying they're openly coming out. Now, Powell didn't. He kind of just changed his rhetoric a little bit. But what I'm talking about is their vernacular. They're saying, hey, the economy looks like it's slowing a little bit more. And 3 Fed members, as a matter of fact, said a July cut is on the table. So they specifically said it. Powell didn't say that. He's only 1 vote, but he is the chairman. So he has a pretty good influential position there, obviously. But the fact that 3 Fed members are talking about it now puts that in the spotlight, and it almost seals up the fact that, okay, they're now leaning this way. They're talking about it because just last week at the Fed meeting, it really wasn't said. Everyone was still kind of guessing. Even after that Fed meeting, there was only a 50% chance. So just in a matter of a week, it switched like that.
So you're saying there's a chance.
So you're saying there's a chance. That's awesome. That's so funny. That movie is so good.
So, okay. So that is, and then we also learned a new term. So I'm excited. Doves. What was the name you used?
Dovish.
It's like dove-ish, or like if you're really in the dove, are you like, that is so dove? Is that a thing?
So it's actually a monetary policy. It favors lower interest rates and aims to stimulate economic growth. So it's actually a term.
You're so dove.
Yeah. It's basically, to encourage spending and investment. So they reduce rates. So they're in a dovish position, meaning that they see the economy slowing. So what they want to do to stimulate is they want to lower the Fed funds rate, to stimulate economic growth and open up more job opportunities, et cetera. So that's what that term means.
All right.
Yeah.
I'm just going to start saying you're so dove. See if it's like a t-shirt.
I feel dovish. Do I look dovish? Look at me.
You look dove. I have to stay out of your mitt, so I don't want to.
Yeah, but when I specifically ask you, that's when you would give an answer. It's not. You don't get to ask questions beyond that. It's not like it's an open Q&A. It's a matter of I ask you specifically, you just answer.
I apologize. We all know the guy sleeps at the girl's house. So anyways, where were we on the, let's talk about what's happening in Austin, Texas with where we are in the market. I mean, we are at the 6-month mark. It is halftime.
It's official.
Pardon?
It's official. It was 5.7 last week, right?
What was?
You're talking inventory. Oh, you're talking time of year. Whoops.
So we're at halftime of the year, and this is the place where you step back and you really sort of acknowledge like where we've been, and then anticipate on where we are going. And so with that said, I thought it would be kind of fun to take a look at our fancy chart here and talk about what is happening in our marketplace historically, because what I want to look at specifically is the county lines at the bottom here, where you've got Travis County is your black, Williamson in orange, Hayes in a dark green, not to be confused with black, because that would be, whoever designed this, don't ask. Bastrop is in gray, and they, only entered into 2010. So Bastrop is pretty young as it relates to where we are with Austin as a whole. And so what I want to look at here is sort of where we have been historically. And I'm just going to look at 2020 right now, because in 2020 in Travis County, our median price was $439.
I'll buy it.
$439. Pardon?
I'll take it.
Right. And so right now, when we look at where we are, we're over at like 480. So everyone's concerned about our dip, and there's no question that we've dipped from our peak in 2022, when the whole world was really kind of up and at 'em, if you will. And so I just like to look at the pricing metrics when you look at how things go slowly over time. And as a year goes, these lines are obviously, they're flat for the purposes of this. But if we broke it out month by month, we tend to do this. And every July, and I should pull that up, I'll get to that. But every July, what happens is we peak in our prices, and then we start to come down. And I'm going to talk about that more for the back half of the year, but this is our sneak peek, guys. The market starts to dip. So that from a competitive standpoint right now in Austin, you have to think about the fact that we have a whole lot of houses for sale. In fact, our most recent number, let me get that right now. Most recent number on the MLS, we were over that 17,000 mark last week. So it's pretty amazing when you think about it, on how many units people actually have for sale. We can't, continue to climb. And, last month, it took an average of 82 days to sell a house in Austin, in the Austin MSA. So it's really a big consideration. If you're thinking and you want to be out by Christmas this year, you need to intentionally price, and you can't price back at those 2022 prices that, we were looking at over here. We are in this market over here, and we just have to consider what that means for the purposes of getting you to the place you want to go as a seller. So there's a lot of strategy. We're officially in a buyer's market. There is no question in my mind. We are in a buyer's market in Austin, Texas, and you need to be prepared for that. Yes, sir.
Yes. Okay. Thank you. What was I going to say? I will say that is absolutely correct. I got 3 deals that came across my table this week.
Okay.
They all were anywhere from 25 to 80,000 less than asking price. They all were on the market over 70 days. So
what were the price points though, Kevin? Because it's the percentage that's more interesting, because I've got a friend in Vegas. He thinks he can buy a $1.3 million house for $1 million. That's 33% off. I don't know if you can do that in Vegas, but good luck getting, or whatever that is as a percentage. What is that? 20, high 20s.
The first time home buyer segment, if I look at it, one was 400. It went for 375.
Okay.
Another was
so that's 20. Okay. So yeah. So that's 20%.
It's not even 10%. It's like,
okay.
It's like 7, 6.
Right.
So it's right in where we're thinking, right? The other one was 580, and it went for 525.
Okay.
So that's 10. So that's 10%. And then the other one was off the top of my head, I just took it in. It was $1 million. And it went for what was it? 890.
890.
Mm-hmm. But
Okay, so percentage again.
In that price, 10%.
Yeah.
So in that price range, that one had been sitting over 100 days. So
yeah, and listen, if you're a seller, and you're trying to get where you want to go, you are pricing for this market. Like there's no point in pricing for any other market. It's today, and otherwise you're chasing the market, and that is not valuable to anyone. You're not getting where you're going. You're keeping your house clean. You're paying your current mortgage. You need to be ready on a dime to show the house on the odd occasion. You get all your hopes up, and your eggs are in that basket, and your life is kind of on hold. This is not, the market of 2022. And for everybody who said, I'm waiting for prices to come down, get off your keister and start writing offers, because there's opportunity right now for you to get a house that when our economy changes again, it will have been the best thing you ever did for yourself. Like, there's no question.
And you mentioned the economy, so I'm gonna hit on a couple things. Number one, you make a great point. If you need to be out before Christmas, well, I take it back. If you want to be out by Christmas and you're planning for that, like I just said, all three of those homes were over 70 days in the market. So now you got to get to the closing table. That's another 30, 45. So you're over 100 days, right? So 3 months, boom, gone. So if you want to, given the percentages I just said, whatever number you're thinking, you need to lower that. So instead of going to the market where you're going to try to get, if you need to move, you need to be aggressive in your pricing. That is what is moving houses right now. And I think if you do that, you're going to get multiple potentially offers, or at least you're going to get traffic, and you're going to get more people that are gravitating towards your home, which is the objective.
Yeah.
Sorry. Go ahead.
I was going to say, we have over 5,000 houses right now that are between $500,000 and $999. 5,000 houses to choose from in and around the Austin area. So when you start breaking that out by area, by school zone, by whatever's important to you in your lifestyle, like that's the thing you want to focus on as a buyer and seller. And I promise that we're going to start doing, I've got some concepts that I'm going to do for breakdowns of the top 10 areas, top 10 zip codes of what's going on. Because if 1 in 5 houses right now is between 500 and 750 in Austin, Texas, which is really where we are, and it's almost 1 in 4, then you've got a lot of choices as a buyer, 3,600 plus choices as a buyer to go out there and go shopping and find the thing for your family that you wanted. And this is a house that you couldn't potentially afford before, because the prices have come down that much. Now, that said, obviously with lending rates, you're going to look at get the best rate you can, and then, refi as soon as possible.
Well, and I'll touch on that. That was going to be my second point. Sorry, I had to do something really quick, but that was going to be my second point. You're in now. The Fed is clearly indicating, and you can see by that chart I showed earlier, we are in a rate reduction. It's coming. We're going to get 1 or 2 towards the end of this year. Now, there's no direct correlation towards the Fed funds rate and the interest rate that you're going to pay in the long term, but it is going to trickle through. And the fact that if you're sitting at, like, for instance, 6.5% now, and you could be at 6% in a year, that could be a significant difference. So, and also, like you just alluded to, make sure you're calling and talking to a really good professional that's going to be transparent, show you what's going on. Me. A little plug.
Go, Kevin.
Go, Kevin. Hey, dude.
Not your birthday, but it's Cooper Goodman's birthday today.
It's my buddy's birthday today. A good shout out to my boy, Mark Flynn. It's his birthday today. And
happy birthday, Mark Flynn.
How can I not be with Cooper Goodman today? I blame you, Goodman. I blame you. This is bullshit. I even wore a nice shirt for him today.
For Cooper.
He should be so thankful. But my point is you're coming into this. So from a strategy standpoint, you shouldn't be looking at what you're going to pay now. If you can qualify, you should at least be saying to yourself, if I can secure 6.5 today, which I've been giving out 6.25 to 6.5 is where rates are currently sitting.
Yep.
So, that's great. If you could say to yourself, I'm going to be at 6 or possibly in the high 5s within the next year. I mean, and you're going to sit and wait for the economy to turn, and then people are going to feel better about themselves. They're not going to want to give away their houses. They're not going to be willing to negotiate like we just talked about, where I'm asking for, I'll take 375. Like, you're missing the boat. It's here right now. And if you wait, come the beginning of next year, it'll all change.
Yeah.
Mark our words. It'll be different next year for sure.
Mark Kevin Weed Mark's words. Kevin Weed Mark.
I'm putting
That's
it.
your new segment. Weedy's Mark.
Ooh.
What do you think?
I like it. I'm actually going to start another chant. My buddy told me years ago I should start the Weed Mark way.
I could. Yep.
I could. Well, what was that gonna? What were you gonna say, Goodman?
No, you. I think
you're
you
gonna
could.
be nice.
I
be
think
nice.
So let's break it down. This is Austin and the monthly that I was alluding to earlier. I think it's only fair that we actually show
I like
the numbers by month on where we are. Why wait? Let's just keep going.
Yeah.
I think I can't stress enough to sellers right now where we go in a market in any given year. So look, here's May, here's June 2024, right? Here's 2025 is in black. Here's where we are currently.
Yeah.
Okay. But in every case, what has happened after June?
You got it.
Our median prices drop. Okay. It's just a fact of life. And so if we look right here on this line, plain and simple. Okay. So at 5.15 in May of 2025 versus 5.52 in 2024, Kevin, you do math in your head. What's that number of percentage difference? It's real. It's real.
Yeah.
So,
but even get out of May. So go back up. I want to look at that really quick. So even take June. So we're in June right now. It looked like it was.
We don't have our June numbers yet, unfortunately, because those come out in 3 weeks.
What I'm looking at is the red. So we were at 520 in June. We went all the way down to about 500. So
we went to 515 from 520 to 515. You mean?
No. I'm talking about the red. So I'm talking about 2024, 520,
Okay.
and then we dropped all the way down to 505. So that's
the end of the year. Yes.
That's 15 grand.
Yep.
Everyone is sitting around waiting. My point is, go out and make the offer.
Bro, that's 40 grand.
What are you talking? That's
the high of 552 in May to 505.
Oh, I'm talking about June. We're in June at 520. So I'm using June.
Okay.
So 520. My point is, you're showing it's going down since June. But the hard part about May of last year, it was just a peak. It looks like an abnormally to me. I don't know why that happened. We had lower rates at that time. The anticipation is we were making the big switch. It's taken another year. But I'm looking at these June numbers and I'm saying you go from 540 to 500, you go to 520 to 505. You're talking 3 to 7% there, right?
Yep.
So go write the offer.
Exactly.
It's going to be the same this year. And I want to point out, if you look now from January, what does it do from January every single year? February, it's up.
Yeah.
March, it's up. April, it's up. May, it's up. So you're waiting for something that you could already go get, and you have a plethora of houses to choose from.
How many in a plethora?
We did this before. I gave my answer and I stand by it, whatever it was.
It's still my favorite line one of my favorite lines. Other than True Love, also one of my favorite lines. True Love.
What did I say?
I don't remember.
I
don't remember. But I guess my point is, if you look in 2024, if you had sold in May, right, that means sold, which means you had put it on the market earlier in the year and it actually sold. I'm looking at like the difference in, let's pretend you were there 80 days, right? That puts you into August, and you look at the difference between August, if you listed in May and you sold in August, you're $52,000 lower. Like that's real money the last time I checked. And how many months of mortgage does that afford you? And so ultimately,
are you okay? I just need to check in. You did some math there, and I just want to make sure you're all right.
it was a lot of money. It was a lot of money. 3 months though.
You
From
were
552 to 500. I can do that one in my head because there's round numbers. But it's a lot of money, right? And where people are like, I'm just going to wait for the insert thing here. Like, if you are waiting, do you really think that you would have made a difference of $50,000 in your home sale or your home purchase that you would have saved in negotiation? Like, go out, save it now, and then let those values come back up later. And like, you're gonna be ahead. Like, you're going to be ahead.
And I've talked about before using the tactic. Again, right now is a great opportunity to use strategy in making that purchase, knowing and believing that better interest rates are coming. The ability to use some of the yield spread, the bank's money, i.e., in other words, that you're going to get because you're willing to take a slightly higher interest rate to cover a majority of the closing costs, knowing you're going to get better rates in the future. I mean, what a great storm, for lack of it, right now presents itself. Yeah. Especially in a market like Austin, where you just have massive inventory.
Yeah. Look, I mean, and this is painting with a really wide brush, but 322 a square foot versus 324, like big whoop.
Yeah.
Like if it actually could hold. And so, I mean, I just love seeing this. And when you look at our market activity, even though we have, maybe less houses that are selling, our volume is up because the price point of the houses that have been listed are higher. So it's just a really, again, interesting time in Austin, Texas for building the greatest opportunity, because most people, let's face it, most people are looking to move up when they're purchasing a house right now. A lot of people are not making lateral moves. Of course, there's going to be a number of downsizers with, and that's something we should talk about at the show at one point, is sort of like the silver tsunami and what's happening with downsizing. But if the house that was $1 million is down 10%, and the house that's at $500,000 is down 10%, on this one you're saving, what's that number, Kevin? $5,000, and on this one you're saving $10,000.
Yeah.
I don't know. Do you want to save $10,000 or do you want to save $5,000?
I want 5. I'll take the 10. You can have the 5.
Okay, thanks. And then I'm going to go to Vegas, and I saw something on Instagram where it showed you how to play the board so that you basically have every number covered.
You'll never lose. Happy birthday, Coop.
Cooper Goodman.
I heard him. Get him over here. Let's get him up front. The birthday boy. There he is.
Thanks, buddy.
Happy birthday, Goodman.
It's your birthday. You can lick if you want to. That's the boy.
How old is he today?
Cooper Goodman is 6 years old today. He has been with me now 30% of his life, just a little, or 50% of his life. Don't make me do math. Half his life. He's been a Goodman half his life, and I couldn't be happier. So let's talk about what's brewing, Kevin. So that's it for buyers and sellers. If you have any thoughts or questions, we'd love to hear them. Obviously, please feel free. Last week, Kevin,
and we're a great team. We're very strategic. I'm just going to point that out. As you heard, Jennifer loves diving into the number side of the housing.
Just don't let her do numbers in her head.
Down. And again, it's a conversation. If you're thinking about it and you're not making a call, you're missing out. That's it. There's nothing pushing on this side. But you got to start having conversations if you're thinking about it, because as you laid out, the timetable is lengthy. It's 90 days if you're a seller. So if you need to shorten that or whatever, it could be longer. You need to start planning. So anyway, that was a plug for us. I'm on a roll. Anyway.
I'm not allowed to ask. All right. So last week we talked about Liberty Hill, and that I'm loving Santa Rita as always. They have continuously won community of the year for like, I don't know, 5 years running or something crazy. As developers, they do an incredible job, but I think they're going to have some competition soon because there is a Leander Springs project now that they have been talking about for years, like I think like decades at this point. And they are looking to build a $1 billion, 78-acre lagoon centered mixed use project.
Uh-oh.
Lagoon centered. How cool is that? So these guys have been at it for years. I mean, they have like $3 million in liens, and they terminated a $22 million agreement that had incentives tied to it. The group's called Island. And they're actually aiming to have the first phase of this project done by 2027. They're figuring it's going to take about 2 years to get the permitting they need, and then another 2 years for construction. People seem gung-ho because they've already secured 200 million
Wow.
via a line of credit in private funding to get this thing going. So that is pretty cool for Austin. We've got a number of water-based projects that are coming, which is amazing because we are in like drought times at this point, although Cooper and I got rained on earlier this morning on our walk. But we need that kind of rain, that gentle rain for the eensy meensy spider. We need that gentle rain to just come and soak in. We don't need that crazy Texas rain that we like to get here, but that slow, gentle rain I was hoping that would go on for a good 24 hours, but apparently it didn't even go on for 24 minutes.
That's an East Coast thing. It doesn't happen for 24 hours here. I haven't seen it.
We haven't had that in a long time. We've had like weeks, but I don't know the last time we had like just, 3, 4, 5 days of rain. Like we haven't had that in a while. So come on, rain gods. But I just think that's really interesting because we've got the 2 surf parks, the one by Matthew McConaughey and friends. And then there's another one that's been announced out airportish way. I mean, and those are multi-billion-dollar projects. So it's really cool to see what the Austin and surrounding area are looking at. I mean, Dallas has done really well with their lagoon space. I remember talking to a client years ago saying they want to buy, at this lagoon property. And I'm like, good luck with that. Like, it's got to actually happen. So fast forward, like I said, it's like probably been 2 decades that the Island guys have been working at it, but they're clearly with the securing that money. There's big interest. So I'm excited to see that come to fruition. I'd love to sell up there all day. It'd be fun.
Yep. You could be up there just slinging deals, talking to people on your board.
On my board. Yeah, I'd have to get a board. It says living in Austin, Texas.
How about that? And Goodman needs one. I mean, shit, he needs to get out there.
Oh yeah, he could be like one of those dogs of Instagram.
Yeah, that he's just out on the board too.
Yeah. Inside the city, one of the things that's really cool, Kevin, is that we've got the Hayes Commons. I don't know. Have you heard about the Hayes Commons?
I have not. No.
So this is like a almost 500-acre mega site that is on the Travis County and Hayes County lines, and they're looking at like 557 homes, 215 acres of conservation inside of that 500, 315 acres of park and open space. They're looking at, I mean, from a development standpoint, and $75,000 in 75,000 square feet of commercial space. But it's been kind of held up because it overlies on the Edwards Aquifer. And as we know, Austin, from an environmental standpoint, that is sacred ground. And these guys have been trying to push through 25% impervious coverage, which is beyond anything that Austin would allow for. We've got something called Save Our Springs, and people are outraged. So right now it's actually on hold because nobody wants to risk what's happening with our waterways and for a money grab. So it'll be really interesting to see what happens in that. But a $500 million makeover is what we're talking about. So stay tuned as it unfolds, because I think these developers, in some ways have pushed a lot of things through. They've amended. So this thing may happen, and it wouldn't be a show without Cooper barking. So we're right on time.
Somebody's in his space. Somebody's in his mitt. Get out of his mitt.
Get out of Cooper's mitt. He's
it's his day to shine.
It is. Every day is Cooper's day to shine.
What are you doing? What are you doing? What are you doing for him today? What's going on?
Well, he had a nice early morning walk. We were out. It wasn't that early, actually. We were out like 6:30. It was kind of like later than I had anticipated, but he's just going to have a good day. He's probably going to get a bath. He's due. Yeah. And maybe some good sneaky snacks for Cooper Goodman.
I love it. I love it.
He's also going to put his 4th of July bandana on.
Oh, that sounds wonderful. I like it. Little patriotism early. We're almost a week away.
He's got his tie. Right now he's wearing a 4th of July tie. But that is going to evolve.
We're only a week away from blowing shit up. I love it.
Thank God that's the shit that we're blowing up. That's all I have to say on that front.
Well, good. I love him. So,
all right.
Anyway,
Kevin, this takes us to our fun fact, and you wanted it to be a quiz.
Ooh, I did. Yeah, lay it on me.
So I'm gonna check your restaurant prowess in the city of Austin. Ready?
It's not good.
Which of these Austin restaurants does not have a James Beard Award winning? Sorry, does not have a James. I'm going to start over. Scooby ending. Start again. Welcome to our fun fact section of What's Brewing. Today's fun fact brought to you by Cooper Goodman, whose birthday says he is 6. Which of these Austin restaurants does not have a James Beard Award-winning chef? El Naranjo, Ola May, Nixa Taqueria, Uchi. That is Cooper's vote.
What did he say? What was his reply?
If you don't know, Kevin, I can't tell you.
I think it's the second one.
It is the second one. And while the Ola May...
He's so happy for me. Cooper knew it too.
So Ola May doesn't have a James Beard, but they have been nominated multiple times. Here's the one thing they do have: a Michelin star. Ooh. So if you are traveling to Austin and you want to have dinner at a Michelin star restaurant, then you want to check out Ola May.
Amazing. Have you been there?
No. Are you taking me?
Absolutely. No, I'm taking Cooper.
He wants a pup cup.
I want him dropped off. I will meet him at the front door.
We'll give him a fluff and dry, and he'll be ready to go. He'll be in his best bandana.
I love it.
Ready to go.
That would be awesome.
Awesome. So that just brings you and I, Kevin, to the last segment of the show, which is Kevin's prediction on whether or not rates are going to go down in this next week. Man. Take it away, Kevin Weedmark.
I mean, this is it's a really loaded question. It's interesting because next week you have a very soft week. So it's all going to be predicated on data. So I think the geopolitical scene is kind of mute at the moment. I mean, unless something erupts and we get dragged into something, as we saw, the fact that we weren't pulled into that conflict and we were on the sidelines saying what we wanted to say, markets didn't give a shit. So they didn't care. So unless we're going to get boots on the ground somewhere, I really don't see a huge adjustment, a flight to safety. So it's going to be data driven. So tomorrow's inflation, I think it's going to come in right around the number. So I think that's going to create pressure on the Fed to commit to a Fed rate cut. Now, next week, you have Chairman Powell speaks on Tuesday. You have several other members of the Fed speaking. And next week, it's a short week because of the 4th. We just said that. It's on Friday. Blow shit up. We got jobs data. So you're going to get your non-farm payrolls. You're going to get your JOLTS. You're going to get all that. if that shows kinks in the armor, which I've been saying for a while, it's a lagging indicator, and I believe it's going to. I think rates get better next week.
All right.
But you do have, the only caveat there is you have the holiday, people leave early. So what that means also is, whoa, can't do that. What that means is that there's less traders on the floor. So they can influence the market because there's not as much money moving around in the treasury market. So you can get a small firm that's got some capital that could just swing because they need to offset a position as the month comes to an end. That's the only other caveat that you need to look out for. And we really can't anticipate positions that companies are in. So you just have to be really aware that that can just kind of move and be willing to ride out those peaks and not panic and know that the valley's coming back. So that would be my only other advice. Be data driven. Don't worry about the other shit, is my point. Oh, there's the garbage people. See them.
Well, that's it for what's brewing this
Garbage
week,
day.
where every week we end the show with a question that I ask Kevin Weedmark. Will rates go up or down?
Yeah.
And 7 minutes later, we find out the answer. Thanks so much for tuning in. My name is Jennifer Eskin. I'm a local realtor here in Austin, Texas. Every week I'm joined by
Kevin Weedmark, nationwide mortgage lender, mortgage specialist, ready to talk. I love conversations. It's great. I've been busy and jump on Zooms, and it's been awesome. So it's good.
Awesome. Thanks so much for tuning in, all, wherever you are, whatever you're up to. Remember, you never know what somebody's going on in the other side of their life. So above all else, please be kind.
That's right. Cheers. Happy birthday, Coop. Bye, everyone.
Bye, all.